Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, May 16th, the day after the CPI, in which we crash all-time highs. It's usually a slow day, and we have to pay attention and be very patient. Pay attention to the economic data. And in this case, we got a lot of housing market data. Building permits minus 3%, still in the negative, and housing starts going into positive. So housing market is still strong, thing that the Fed does not like. And apart from that, we got initial jobless claims higher than expected. The 220K, we got 222, and continuing jobless claims also pushing higher. So labor market, it's actually cooling down, but I think Fed expects more. So we have two things today to consider in terms of expectations from the Fed. Housing start, I think this is a miss. And initial jobless claims, this is barely a hit. I think this is a mixed sentiment. So it's not good news. It's also bad. It's neither bad news. And we have to also pay attention to industrial production at 0%, same basically, and as expected. Industrial production year over year on the negative, and manufacturing production is still on the negative. I think this is a check in the right direction to fight inflation. But also today, we were receiving Fed talks, and Barr said that inflation it's not progressing as expected. Harker is hawkish, saying that obviously the rate hikes are out of the question, but he doesn't see that the market it's actually pricing in the proper cuts. And Mester also with the inflation is still higher, so higher for longer, it's still the narrative. And also look at this. Remember that the government needs to control the spending, needs to fund their debt, and all these actions take a lot of eyes. And that action just caused the market to tumble a bit because we are still at these high yields. 5.27, it's actually insane. And also for the mortgage rates, look at this, we are still pretty damn high. So yields are not going down. And the day after the PPI and CPI, the day in which we try to push all-time highs, these kind of things are a bummer. And we have to really pay attention to what the price action is telling us. And this is the 15-minute chart. This is yesterday's push into all-time highs. All-time highs is this orange line. So during the overnight, we pushed and we stayed in this range for the entire pre-market. If we go to the 1-minute chart, this overnight was actually insanely choppy. Look at this. Up, down, up, down, up, down, up, down. And we were building all this liquidity to the downside. That was pretty damn, I think, interesting. So my setup, I took the loss on this pre-market trade because we tested several times the previous all-time highs, and in this bounce we left a fair value gap on the 5-minute and also on the 1-minute. So I took basically, as always, I take the first candle to make a new high in this push of the fair value gap, and my target was basically a move to take all this liquidity out and then take profits at these pre-market highs. And the numbers just came out of initial jobless claims, and we got the initial move up and then dump it. And it is what it is. I lost barely 10 points, a little bit of a slippage there, but it was a bummer because basically that was a typical manipulation move for the news. And since then, we were just trending lower to try to find some bids. And again, another setup that didn't complete because I was watching this pivot pre-market. This pivot pre-market gave me the opportunity to wait for a pullback at the open. So that white line was kind of the move that I wanted to buy, and we never touched there. We left this space, which is usually quite surprising, and we started moving without any kind of, look at this, there's no imbalances. We just took pre-market high and then continued chopping. This was the Fed stocking, and this one was the auction, which I think it was also a reverse operation, repo operation from the banks. So they took a lot of debt again, and the market doesn't like that. So we are still chopping. The only thing positive today is that we are still holding levels, but the big correction or the big pullback that I was expecting after yesterday didn't happen. And we only got chop after chop after chop. So it's time to just throw the towel. I try to find some setups, but it's just pretty difficult today because the dollar is quite strong. The dollar was actually building a lot of momentum to the upside after yesterday's, leaving a gap and also taking that gap. So we are now seeing a little bit of weakness, but now again bouncing. So it's overall in a pretty decent bounce from yesterday. And the yields, the 2-year yield, it's up 1.21%, and the 10-year yield is also in the green. So both yields and the dollar are basically pressuring equities. Right now, the ES is 0%. It's at all-time highs after all these huge push to the upside. So banks are in the red, and the Nasdaq is quite mixed. Apple trying a little bit, but super choppy also. Microsoft in the red, choppy. Amazon consumer discretionary in the negative. Meta being probed by the European government, super choppy and in the red. And small caps also in the red. So it is what it is. We were expecting continuation, but looks like due to the news and other kind of markets bouncing, like the dollar and yields, are pressuring the Nasdaq and the S&P. So we have to really be patient. We have to be disciplined to wait for our setups. I try to find a little bit of setup there, but I just had to take the loss. And I would like market to really continue moving lower and find some kind of support in this order block, or perhaps in all these fair value gaps that are aligning with the 50% retracement. So that's my best setup for maybe tomorrow, but I don't know if we are going to see the Nasdaq from here drop 1%, 0.85% tomorrow. What is true is that investors are waiting around here. There's a lot of confluence here for investors and long-term buyers to really find some kind of opportunity. So if we day traders are impatient, we are going to pay the cost. Investors are waiting. I would not like to buy the Nasdaq here for a continuation momentum move. I would prefer for the Nasdaq to just pull back a bit and gave people the opportunity to jump in the long term. And hopefully tomorrow we'll have that opportunity, who knows? And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that today is pretty choppy day, and after all-time highs, we have to really take it easy and slow. So be patient, be disciplined, manage your risk, because tomorrow it's a new day, and I think we have to end the week in a pretty high note. So be careful, stay safe, and see you tomorrow.